Hey, good morning, everybody. Hello, happy Wednesday. Welcome to Business Mastery Wednesdays live webinars. My name is Justin Bolgen. Let's get started today, real quick. We're going to just go through this thing and make sure that you guys get value today. We're not going to be here for more than 30 minutes, guys. Okay. So, today we're going to talk about business mastery, understanding business structure. Last time we were together on this call, well, I was a single guy. The last time we were on this call. And now I'm a married man. Look at that, man. That's exciting. First call that we're doing here where I am married. And I am so blessed to be that. Okay. And guys, just real quick, I went to Jamaica, got married to a wonderful woman, all right, that I get to do life with. And I'm telling you, man, if you have not found a partner in life that you can do life in a big way with, then you're missing out big time. Okay. So that's what I want to say about that. Especially if you're an entrepreneur, everybody here in this conversation is an entrepreneur. You want to make sure that you are paired up with somebody who has your back inside of what it is that you're up to. It just empowers you to do more. So much more to say about that, but I just want to throw that out there. Yeah, I'm a married guy now. First call since I am married. Fantastic. All right, now let's get back to it. All right, so today we're going to be talking more so about business structure as a continuation of the last conversation we had about compliance and making sure we have mastery inside of compliance so that there's no thing in the background that says I might be shut down or something may happen where my business is no longer operational. I'm at risk at a certain degree. So we're going to break down some components of this and talk about business structure. And there's a lot of conceptual things circling around, and as far as what business structure you should have, the things that you should do, and how you should set your business up. And we want to go over some things in this conversation that will hopefully bring clarity to your business. Okay. So with that being said, of course, this is me, Justin Bolgen, Senior Consultant over at By the Books Consulting. And this is how you reach me. You can also hit our website at youraccountingsuperhero.com. And quick disclaimer before we get started. The following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. And if you're on this call, even if you're watching a replay of this, and you want to make sure that we have relevant topics to you, like something that's going to make the difference inside of how you're conducting your business as an entrepreneur. The whole idea inside of what we do here is to make sure you have access to level up in business. Okay. So if you have anything that you want to bring to the table, as far as conversation wise, that would be of value to you, you can do that by sending me an email. You can reach out to me on Instagram or on LinkedIn at Your Accounting Superhero. So 10-figure business mastery. So this is what it is, right? And some of you, like when we hear this term 10-figure business mastery, it seems as though that's like far out there. For some of you, it's like, yeah, that's what we're doing, right? And there are many layers in between that. So wherever you are in the grand scheme of things, just know that you're in the right place. This conversation is for you, okay? The whole idea is the last part of this, which is business mastery. What is it going to take to master your business at whatever level that you're in and take it to the levels that you really intend to take it to from where you are, okay? So that's what this is about. And we have some tenets that we stand on inside of this platform. Number one is intentionality. We call this mindset mastery. Number two is financial literacy or financial mastery. 3 is going to be structures and system mastery. And 4, last but not least, are actions or execution mastery. We have all 4 of these running inside of our business harmoniously. And then we move forward with velocity inside of business and inside of life. Okay, there's nothing can stop you. Become unstoppable inside of your business. So we started this conversation about compliance, removing the headaches. So in the background, there may be a little bit of stress and wondering of whether or not you are set up the way you need to be set up, if you are following the rules, if you are compliant, if your company's at risk, and there are some stressors around that we want to make sure we remove. All right, to have you have the confidence that your business is actually doing the things that are above reproach. All right, so you're above reproach in business. And you know this, right? You want to make sure that when you're going out and operating day to day, that you're doing things the right way. And that's one of the things that we have here is a by the book and a by the books philosophy. All right, so you want to make sure that you're set up to win in that area of business. So we're continuing this conversation today. We talked about a few things that we want to consider inside of compliance. All right, like how your business is licensed and where you're set up, where jurisdiction you're in, if you're legally operating in that jurisdiction, paying your franchise taxes and permits and, the things that go along with having people on your payroll, like your employees. All right. All this tax compliance stuff that we mentioned last time. Okay. And of course, we want to make sure we're tracking and monitoring our business in a way where we're not just compliant, but we're actually crushing it inside of our business. So the by the books philosophy, all right, this is where we are mindset wise inside of this. And last time we talked about, being diligent about understanding your compliance. We'll get into some of that today. And you want to develop a system, okay, to make sure that everything that your business is supposed to do compliance wise is automated and you're on top of it. And of course, we want to continually be consistent and reliable for working our plan. All right, so I want to talk today about structures for your business because this is really the fundamental starting point. And a lot of times we get into business, like for you that are you guys that are starting out in business, or even if you've been in business for a while, some of this stuff may seem not so straightforward. Like, what do I do? Like, what are these types of setups? What are they for? How do I use them in my business? What's the right thing for me? What do I need to look out for? What is the best setup? And what does that really look like? Okay, so there are some basics here, right? Sole proprietorship, partnership, LLC, corporation. These are the structures and entities that you can have for your business. Okay, and we're going to break each one of these down one by one here today to give you an idea of where it is that you want to be inside of your operation for your business. All right, and the way we want to do this, I'm going to actually start sharing. I'm gonna bring up another whiteboard here, guys, so we can get some real good visual on this. Okay. So bear with me a second, guys, bringing this up. Okay. So we have a few things that we actually can do here in terms of business setup. First thing we had on the list here is sole proprietorship. Well, now what is a sole proprietorship? Most of you know, basically this is an individual who's doing business. All right. So you're by yourself. You start a business. Let's say, I remember back in the day when the first business I started was a cleaning service, really carpet cleaning. I was a sole proprietor. I was on my own. I had bought equipment and I would go from place to place and I would clean carpets. I did not have a structure when I started. Didn't know any better. Okay, I was like 20 years old, 21 years old, or something like that, and started this carpet cleaning business and expanded to multiple cleaning services from that, and it was sole proprietorship, which means it was just me by myself doing this business. No protective structure. I had insurance, but outside insurance, there was nothing. Like so, basically, there are two things we want to look at when we talk about entities and business structures. Number one, we talk about protection. Let's get rid of this fill here. Number two, we're going to talk about um, tax exposure or tax treatment. All right, so the entities are really, there's one more thing that I want to discuss here with this, sorry, but these are two main things. Well, we even put this other thing here too, capitalization, capital structure. So now we put together an entity, we have these things that we're looking at, okay? Protection, tax exposure, tax treatment, then we have capital structure. We're going to talk about each one of these aspects of the entities that we choose, and what are the real benefits here if you're choosing one versus the other. So sole proprietorship is the most basic thing that we can do as a business owner. We just said we want to do things on our own. You might be doing a Lyft, Uber, some type of ride share program, or you may be doing DoorDash or some type of gig job, and you really didn't go through a process of setting up an LLC or registering with the Secretary of State or getting a business license to do these things. It's a side hustle, okay? And even though it's a side hustle, because it's a side hustle, it puts you into a category of business ownership to a degree. All right, now you are in the hat in the category of business owner. All right, you get a 1099. You're not an employee. You are what we call self-employed. Okay. Now, when we do that, this is the most basic level, and we don't have much protection, right, with the sole proprietor. So if I were to look at the three components here, and I were to do a checklist, and whether or not it has any of these for a sole proprietor, I would say, look funny here. Maybe just draw my little X here. Does it have this? No, no protection really. Does it have favorable tax treatment? No. What about the capital structure? Does it have a favorable setup for capital structure? No. Okay. Now, let's talk about some of the nuances. There are some benefits to being a sole proprietor, right? The freedom of being in your own business, the simplicity of it. I just go out here and do a job, provide a service, or sell a product. I get paid for it, right? And I can actually control my own destiny when it comes to how much income I can make. And if I have insurance, I'm going out here making sure I have like general liability insurance, I have enough coverage, then I'm somewhat protected inside of what I'm doing. Okay, to the extent of the insurance coverage. Okay. Then you can have deductions, like things that you would not normally be able to deduct tax-wise, as opposed to you being a W-2 employee versus being somebody who's a sole proprietor. You have benefits there to deduct ordinary and necessary expenses, things that you would not normally be able to deduct as an employee, like your mortgage interest. If you have a home office, you can deduct those things. Your vehicle expenses. If you're traveling for the business, using your personal vehicle for a good portion of that business, well, that now is deductible. All the costs associated with that are deductible. Pay your children, if they're working for your business. Now you have a benefit there to hire your kids as a sole proprietor and take a tax deduction for, the wages that you pay your children. Now think about this. Now, if your children are interested in a whole lot of extracurricular activities, you're spending money on them anyway. Why not have them work inside of your business and pay them a wage? And now those things that you pay money for anyway are deductible expenses because they can pay for it themselves. All right, you pay them a wage, and now they have that to pay for the other things. All right. So there are benefits to just being in business for yourself, even as a sole proprietor. The thing is that as a sole proprietor, it's very basic in terms of, the limited protection, the limited ability to be shielded from tax exposure, and then there aren't like a whole lot of opportunities in terms of capital structure and capital um, and capitalizing your business. So when we talk about capital structure, there's two things we're looking at. It's debt and equity. So yeah, you can take out loans per se, but most of the time it's going to be a personal guarantee. It's going to be all in your personal name. It's not really going to be separated to the business to the degree that you want to have it separated. The other thing is we talk about equity positions. Well, you're the only owner in it. You're not really selling off shares to raise capital that way. So there's really a limit there in terms of how much capital you can have in the business. Okay. Now we're talking about this as far as, business structure and setup in terms of compliance. We want to have a game plan, guys, when we're moving into a business. There's a game plan that you want to have in play to say, okay, well, this is the type of business I want to do. This is what I predict I'm going to make. What's going to be the best setup for me in order to have wins all the way around inside of how I'm doing business? This is where we want to be, right? So if I'm a just sole proprietor, a lot of cases, I'm just getting into business without much thought behind how this business is going to be structured and what this business is going to do for me. And it's fine to get started like this. And at some point, we want to really level up inside of how we're um, structuring our business strategically to set us up for sure wins. Now, let's talk about the next thing was partnerships, right? So what is a partnership? Just going to review this real quick. Partnership. Boom. Now I'm going to move this over. Bring this down. Analyze partnerships for a little bit. Just a little bit of analysis for these these structures. Okay. So partnership is similar to a sole proprietorship with one caveat. There's more than one owner. Let's say it's two sole proprietors or more getting together to conduct a business. Now, partnerships can be the partnerships are actually a really flexible structure to have. Right? You can have kind of the best of all worlds inside of a partnership. But if you're just basically getting into it, then you might not have all the benefits there that you want. So what are we talking about? Like basically, like if I get set up with a partnership, I have two sole proprietors two or more sole proprietors getting together. It's basically the same deal. There's not much protection there in a basic general partnership. Right? There's not much protection, general partnership. Let's undo that real quick, guys. The color's all messed up. It's supposed to be red. All right. So not much protection there. We still have the same level of tax treatment. And the tax treatment that we're talking about, guys, self-employment tax is what we're looking at. Self-employment tax, so SE tax, is the thing that we're dealing with when it comes to sole proprietorships and partnerships. Okay, so this is what we're really dealing with to a large degree when we're talking about these structures. Now, you have unlimited exposure to self-employment tax, which means all the money that you make in the business will be subjected to this thing called self-employment tax. This is in addition to ordinary income tax, like federal income tax, in addition to your state income tax. You also have self-employment tax that you have to consider. Okay. Now, you don't have much options when it comes to this. You don't have many options when it comes to the partnerships and sole proprietorships to reduce the self-employment tax. Now, I will say this: capital structure wise, now you have more than one individual here, or more than one business owner, multiple owners. So now you have diversity in terms of capital, and this is actually a better option when it comes to business structure, because now the partners themselves can contribute equity to the company, or the partners themselves can use their credit to get debt to use to capitalize the company, right? But we're still dealing with personal guarantees and the things that really don't separate the owners from the business when it comes to that. But you do have options as far as capitalization is concerned. So there's a benefit there. All right. So that's partnership. I did say that partnerships are very flexible. And if we don't have a whole lot of time in this conversation to get into the level of flexibility, like the types of things that can go on with a partnership, because there's different types. You have general partnerships, you have limited partnerships, limited liability partnerships, and depending on the nature of the partner, you could reduce the self-employment tax if you're a limited partner in a partnership, which is like what we call a silent partner. Well, you're a passive investor, so you're not really subject to the self-employment tax as a limited partner. Only a general partner is subjected to that self-employment tax. And that general partner doesn't have to be a person, it could be another company. Man, there's so much flexibility within this partnership. So this is a consideration for a lot of people, a lot of business owners, right? And this is one of these strategic elements, like the partnership is a strategic element that a lot of companies can use, right, to make sure they have the best of all worlds inside of this, okay? Now, the other thing we want to take a look at, all right, and I'm going through this pretty quickly, guys. Now, if you ever want to get into detail about any of these structures, you want to have a consultation about this, you can reach out to me or anybody here at the firm. You can make a call here, 888-4BTB now, 888-4BTB now, or you can reach out to sales at Buy the Books Consultants. Okay. This way we can have a deep conversation. We can have you guys can get, like, if you're first time in, you can do we call a strategy session, complimentary strategy session, to understand exactly where you are inside of your structure and what the options are for you and what actions you can take from here moving forward to bridge any gaps that there may be in terms of where you are structure-wise to where you want to be, and then start to really also bridge that compliance gap, which most businesses in the early stages are going to face. This is an issue that we always want to look to bridge, is a compliance gap. Like, how am I going to be 100% compliant inside of what we're doing? Okay. Today we're covering a lot of the fundamental basics of the structures, but the detailed work, you really want to get in for a consultation to see your specific situation and what you want to do. Okay. And that's how you do that. All right. Let's take a look at something else. All right. Let's go into an LLC. To play that. Come on now. LLCs. Okay. Most people start with the LLC. This is the thing that a lot of people will do. They'll say, okay, we need to start a business, so we're going to get this LLC set up, which is great. It's fantastic. Okay. But at the same time, where's my eraser, guys? What happened to my eraser? I just had my thing here. Well, anyway, let me just delete this all the way around, and we'll start fresh. Okay. So the thing about limited liability companies is that it provides protection. All right. Now, I mentioned before that you can get insurance, you can get general insurance for your business, and you always want to have insurance, liability insurance for your company. And what happens when the insurance company doesn't want to pay out the damages for this? What's going to be next? Right. Well, we needed something that's going to separate and limit the liability to the business itself. All right. So that's what a limited liability company does. It limits the liability to the business itself, and it doesn't go outside of that that corporate structure, that corporate veil, per se. As long as we're behaving, that company, that limited liability company, behaves as a company and not as the same as the owners. Okay, you can't. It doesn't. It wants to look different and operate separately from the owners. What does that mean? What do you mean? What do I mean by that? It's separate bank accounts, policies, procedures. You have your operating agreement, abiding by all those terms in the operating agreement, right? Not commingling funds. You're not paying for personal expenses out of your business account. Somebody asked me that a couple of nights ago about, hey, can I use a business credit card to pay for my bills at home? Well, no, you can't do that per se and be compliant. Well, now you don't have a business anymore. You don't have any protection anymore. It's out of compliance. Okay. Now, there are other things you can do legitimately inside of your business, like as far as policy wise, to enable those expenses to be taken care of by the business, but not straight away like that. You don't just take the business account and pay for your personal expenses. It's called commingling, out of compliance, no protection. Okay. But outside of that, the limited liability company, the LLC, serves to have great protection. Now, as far as tax exposure and tax treatment, all right, this is what we call a nothing entity when it comes to tax treatment. And it's a disregarded entity for tax treatment. Okay, so that means that the IRS or the governing bodies, the state tax authorities, or the tax agencies do not treat this anyway for tax purposes. What they will do, however, is look at the underlying structure of this. How is it composed, and what is the composition of this thing underneath the LLC? So if it's a single member LLC, for example, it will look at this as a sole proprietorship for tax purposes. Okay. If it's a multi-member LLC, it will look at it as a partnership for tax purposes. Okay. So that for tax treatment, no real tax treatment for that limited liability company. You can choose and elect how you want to be treated for an LLC. All right. A lot of people just don't choose how they want to be treated when it comes to an LLC, but the structure in and of itself has no specific treatment tax-wise, which is in reality, you have flexibility there in how you're going to be treated for taxes. Now, capital structure is another thing here, okay? Because now you have a company that you can point to, and now you can have debt and equity built out of your LLC, okay? Even if you're a single member LLC, now there's some things with like net 30s and everything you can build with the company, and now it's separate from you, and now you can start building out some business credit. Okay. As far as equity, it's always going to come down to, like, if you're a single member LLC, it's going to come down to your ability to inject capital in your business in terms of equity, right? So two things with that: either you're going to really do great in terms of profit, and that will be your building up your capital because you reinvest the profits into the business, or you're going to keep injecting money for yourself from your personal assets into your business in order to build that equity capital structure. Okay. And guys, let's go over one more thing here. All right, we're going to move on from LLCs real quick. We're going to talk about corporations, and then we'll be wrapped up. Okay. Boom. come down here, talk about corporations. True separation here, guys. This is what we're getting toward, true separation. All right. Um, when I say that, well, the business stands on its own in these structures, right? When it is completely separate from the individual, which is what you want for any business, right? But the type of structure that is available in corporations, it makes it a lot more clear. If that makes sense. Okay. Now, S corps, for example, like you have two different types of corporations. You have S corps, you have C corps. All right. So protection is there. Okay. So definitely have protection in the corporate level. Same as what an LLC does, which is a different entity. It provides you the protection that you need. All right. And the exposure, the risk exposure is limited to whatever is inside of the business, as long as it's treated as a business, same way. Now, favorable tax treatment. Okay. There's a lot more tax flexibility here inside of a corporate structure. Now, if you're doing a regular business where you're providing a product or service, then S corp for most of us is where you want to be because of this whole tax treatment, favorable tax treatment of S corps. What is that? Well, as long as you have your wage component of it, you pay yourself a wage, call it a reasonable compensation for the shareholders who are active in the business. Well, that is the only thing that's subjected to self-employment tax, which is basically your Social Security and Medicare portion. They call it FICA. What you see on your paycheck when you get it, you'll see that FICA is just taken out. Normally, what you don't see is the employer side of it, right, which is the other half of that FICA liability for taxes. So whatever your wages are for that, that's what's subjected to that self-employment tax. But the profits of the business outside of that are not. And this is considered passive income, right? So it's ordinary income tax without having self-employment tax attached to that. This is one of the main reasons why people use S corps, is because they have the control over the amount of self-employment tax that they're exposed to. Okay. So really good here. And of course, capital structure, man, is a win inside a capital structure as well, because there's unlimited possibilities inside of how we can, get, equity positions. Like we can have shareholders in corporations. So shareholders contribute to capital, and that's equity in the company. And man, you can just get to your 10-figure business mastery a lot sooner, because now you can get fully capitalized as long as you're good at raising it. I mean, spot on, man. You can just move this thing forward. And also debt too. Now you can actually have this entity, this body can create debt for itself outside of the shareholders of that company. This company in and of itself doesn't need a personal guarantee. It can stand on its own. Okay. So these are the things we want to take a look at inside of the structure that you have. There's more inside of this, but we just don't have any more time to get into it today. All right. So hopefully you got some value out of this conversation. You learned a little bit more about the structures, and have somewhat of a sense made out of what is the best option for you when it comes to this. And if not, of course, you can always reach out to me again on email. All right. And anybody here at the company, sales@buythebooksconsultants.com. All right, guys. With that being said, we are complete. We are wrapped up. It's great being with you. Back again on a Business Mastery Live Wednesday. And I will talk to you later. Take care. Bye-bye.